Operating as a sole proprietor leaves personal finances exposed to total ruin, while a fully registered corporate architecture locks your risk behind a statutory wall. If you launch a business without filing formal formation documents, you default into what is called a sole proprietorship. Under this default status, the law makes no distinction between you and your business. If the business is sued or defaults on a debt, creditors have direct legal access to your personal savings, your vehicles, and your home. You stop this exposure by building an entity shield. Iowa Code Chapters 489 for LLCs and 490 for corporations provide a strict statutory firewall between operational business risk and the owner's personal wealth. Activating this protection requires a single flat filing fee of $50, paid directly to the Iowa Secretary of State. For that $50, you purchase the legal separation of your personal assets from the daily liabilities of running a commercial enterprise. Once this initial liability firewall is established, the focus shifts to the internal logic of the entity and how different tax classifications change the amount of profit you actually retain. This compares structures. The Iowa LLC passes profits to your return at a flat 3.8%. C corporations suffer double taxation, corporate tax up to 7.1%, then dividends. The S-Corp is a federal tax election via Form 2553, applied over an LLC or C-Corp. This election lets owners optimize their tax burden by splitting income. First, the owner-operator takes a reasonable W-2 salary for their labor. After paying that salary, any remaining profit generated by the business is passed through to the owner as a distribution. The W-2 salary is subject to the federal 15.3% self-employment tax. The distributions, however, bypass that self-employment tax entirely. Your entity selection dictates your tax exposure. For high-earning founders, the S-Corp election is an optimization lever bypassing thousands in self-employment taxes. To build this architecture, you must execute your filings through the Iowa Secretary of State's fast-track filing system.
This video contains affiliate links. I have a relationship with the brands in this video and earn a referral fee when you shop through the links in the description below. Before we dive into the exact state steps and paperwork, let's talk about your foundation. You absolutely cannot build a successful brand or protect your personal assets without a properly structured legal entity. Most people try to launch as a sole proprietor or cut corners on their initial state filings. And that is exactly why they face massive personal liabilities or get their applications rejected by the Secretary of State. Your business must be a legitimate, separate legal entity. That's where Busy comes in. Busy is the absolute best formation service out there, handling your entire LLC or corporation setup for just $0 plus state fees. They take care of all the heavy legal lifting for you, filing your official articles of organization, providing your legally required registered agent service, and setting up your ongoing compliance alerts, so you never miss a state deadline. This step is non-negotiable if you want to operate legally and protect your wealth. I've linked my full in-depth review of Busy in the description, so you can see exactly why they are my top recommendation. Make sure to use my link down below to register your business through Busy today, which will also unlock exclusive discounts and perks. Get your legal foundation handled first, and then let's get into the step.
Before submitting any paperwork, you must verify that your desired business name is available using the state's Business Entities Search tool. Iowa enforces strict naming statutes. Your name must be fully distinguishable from every other registered entity, containing a proper corporate designator like LLC. You must also appoint a registered agent. This designated individual or company is legally authorized to receive lawsuits and official state notices for your business. The state imposes a strict geographical mandate. The registered agent must maintain a physical street address within Iowa's borders. P.O. boxes are legally invalid. Because the registered agent's address becomes permanent public record, founders frequently utilize commercial registered agent services to keep their personal home address private. When you reach the upload portal, you hit a friction point. Iowa does not provide a pre-filled fill-in-the-blank formation form for you to simply sign. Instead, founders must custom draft their own certificate of organization, ensuring the document matches the statutory requirements of Chapter 489 before uploading. Once the custom PDF is uploaded, you execute the $50 standard filing fee using an approved electronic payment to submit the architecture for review. Mastering the specific interface of the Fast Track portal represents the final execution of your legal strategy. State-level formation is only the first tier. To make the entity operational, you must immediately secure its federal identity.
You secure an Employer Identification Number or EIN directly from the IRS website. The number is free and founders should not pay a third-party service. Next, you draft an operating agreement for an LLC or corporate bylaws for a C-Corp. This acts as the internal governing blueprint. This document legally dictates ownership percentages, the exact math for profit distributions, and the management hierarchy of the organization. Operating without governance documents allows a judge to pierce the corporate veil, destroying the liability shield and exposing your personal assets to total ruin. For non-U.S. residents and foreign founders, federal compliance carries a secondary, severe threat. Single-member LLCs owned by non-U.S. persons are subject to IRS Form 5472, a mandatory annual filing reporting transactions between the LLC and its foreign owner. The penalty for missing this specific filing is an automatic $25,000 fine from the IRS, applied even if the LLC generated zero income that year. The liability shield remains effective only as long as state formation is supported by disciplined internal governance and federal tax compliance. With the legal framework secured, you must connect the entity to the physical and economic landscape of Iowa. Take your approved state formation documents and your federal EIN and open a dedicated business bank account. You must never commingle funds. Paying personal expenses out of the business account invalidates the legal separation of the entity in the eyes of the law. With capital isolated, you navigate to the GovConnect Iowa dashboard, the state's centralized hub for managing operational taxes. Here, you register for a sales and use tax permit, required to manage Iowa's 6% state tax on software, SaaS subscriptions, and tangible goods. If your entity plans to hire W-2 employees, including yourself if you are executing an S-Corp election, you must also establish employer withholding accounts. For S-Corps, GovConnect Iowa is also where you elect into the pass-through entity tax. This advanced maneuver allows business owners to pay state tax at the entity level, legally bypassing the federal $10,000 cap on state and local tax deductions. Disciplined banking architecture and full GovConnect Iowa integration are the mechanisms that transform a static paper entity into a fully operational, revenue-ready business. Corporate maintenance is a long-term reality. The state grants your liability shield, and the state retains the authority to revoke it. Iowa offers an extremely low cost of entry at $50, but pairs it with a uniquely structured compliance schedule. This timeline illustrates the biennial trap. Iowa skips standard annual reporting. Instead, LLCs file compliance reports in odd years, and corporations file in even years. When your year arrives, you must file within a specific window, January 1st to April 1st. The financial cost of this maintenance is minimal. It requires a $30 fee when submitted electronically through the Fast Track system. The danger lies in human error. Founders rely on generic annual report calendar reminders. They see no bill during their off year, assume they are compliant, and miss the actual deadline entirely. If you miss this deadline, the state initiates administrative dissolution, stripping the business of its legal liability shield and defaulting you back to personal exposure. Corporate architecture is an ongoing strategy. Your liability shield and tax optimizations only survive as long as you maintain absolute precision in your calendar compliance.